The Canadian housing market has cooled down recently, with national average sale prices down 3.9% on a year-over-year basis, and a more balanced housing market condition resulting from higher inventory in provinces like BC and Ontario. With home prices and interest rates dropping and less bidding wars, this could finally be your chance to buy your first home here in Canada. And the good news is that there are benefits available only to first-time home buyers that can save you thousands of dollars in taxes. And if you combine all the strategies covered in today's video, you could save up to $62,700 in taxes alone. In today's video, I'll walk you through how to maximize your tax deductions, get a bigger tax refund and or tax exemptions so that you can put more money towards your first home by using the following tools and strategies. The home buyer's plan under the RRSP, the first home savings account or FHSA, the tax-free savings account also known as TFSA, the home buyer's amount tax credit, property transfer tax exemptions, and the GST rebate for new builds. We have a lot to cover today, so let's get started. Home buyer's plan under the RRSP. You might already be familiar with the Registered Retirement Savings Plan, also known as the RRSP, which is a registered account with the Government of Canada to help you save towards retirement. You could contribute a specific amount to your RRSP each year based on your contribution limit. I won't go into all the details here, but you can watch a separate video on that, which I'll link above here. In this video, I'm solely focusing on the home buyer's plan, or HBP for short, which allows you to withdraw funds from your RRSP tax-free as a first-time home buyer. As of now, the withdrawal limit under the HBP is $60,000. That means that you could withdraw $60,000 tax-free. Normally, RRSP withdrawals are subject to withholding taxes by the bank, and you also need to include it in your taxable income and be subject to tax. But under the HBP, you could actually withdraw from your RRSP tax-free. So if you contribute $60,000 to your RRSP, your tax savings could be $16,920 in BC if you are at the 28.2% marginal tax rate, which means that you're earning income between $57,375 and $98,560 according to the 2025 tax rates. Or you could save $17,790 in Ontario at the 29.65% marginal tax rate, and this is if you're earning income between $57,375 and $93,132 according to the 2025 tax rates. Now keep in mind, it's more beneficial to apply your RRSP deductions to your income in the higher tax bracket that you qualify for. If you are making $80,000, your highest marginal tax bracket is 28.2% for taxable income between $57,375 and $98,560, whereas your marginal tax bracket for income between $49,279 and $57,375 in BC is 22.2%. You want to use your RRSP deduction for income in your highest tax bracket for the bigger tax savings. For any unused RRSP contributions, you can choose to carry forward any unused amounts to a future year. To really hit it home, let's go over an example. Let's say that you make $80,000 a year and you have saved up $60,000 in a high interest savings account that you decide to move into an RRSP, assuming that you have the contribution room. You can do two things. The first is you could deduct the full $60,000 RRSP contribution in the year, which reduces your taxes by $13,805 according to this Wealthsimple 2024 tax calculator. The second option is to deduct your RRSP contributions up to the next marginal tax rate of 22.2%, which is at the $57,375 threshold. That means $22,625 of contributions are used, which is the $80,000 less $57,375, and carry forward the remaining contribution of $37,375, which is the $60,000 contribution less the $22,625 used in the current year for future use against the marginal tax rate of 28.2%. This way, your total tax reduction is $16,920, which is $3,115 $8,000 greater than option 1. And you can see how I calculated the tax savings here on the screen. So you could choose which option makes sense to you depending on whether you want to receive the tax reduction right away in option 1 or you want to optimize for total tax savings in option 2. Now, in order to qualify for the HBP, there are a few eligibility rules that you need to keep in mind. The first point is very important because there is a time limit on when you could contribute and when you can withdraw in order for you to take the RRSP deduction. And so you need to withdraw after 89 days that you make your RRSP contribution, or else the contribution is not deductible. This is important to note because the whole benefit of the RRSP contribution is to get the deduction and to reduce your taxable income. So if you contributed to your RRSP on January 1st of 2025, you don't want to withdraw that amount under the HBP under April 1st of 2025, just to be safe. You must also be obviously a first-time home buyer, and you also must have a written agreement to buy or build a qualifying home. You must also be a resident of Canada from the time of withdrawal until you acquire the home. You must also intend to occupy the home as your principal residence within a year. And you need to submit a form T-1036, which is the home buyer's plan request to withdraw funds from an RRSP. So make sure to talk to your accountant or do your own research to confirm your eligibility and certain exemptions that you may qualify for. And this applies to all of the strategies that we'll be covering today. Now, once you withdraw under the HBP, something you need to note is that you need to repay it over a maximum of 15 years. So a $60,000 withdrawal means repaying $4,000 annually. Though there has been a recent update from the government, which now allowing a 5-year deferral instead of the original 2-year deferral of the repayment start date if you made your first HBP withdrawal between January 1st of 2022 and December 31st of 2025. For example, if you withdrew in 2025 of this year under the HBP, your first repayment wouldn't start until 2030. First Home Savings Account, FHSA. Another great tool is the First Home Savings Account, or FHSA for short, introduced on April 1st, 2023. You could contribute a maximum of $8,000 per year up to a lifetime maximum of $40,000 and withdraw the full amount tax-free to buy your first home. There are a couple of major perks for the FHSA. The FHSA is the best combination of an RRSP and a TFSA in that you get a tax deduction like an RRSP and you can withdraw investment gains tax-free like a TFSA. So if your account grows to $100,000 from contributing only $40,000, you can actually withdraw the full amount tax-free, unlike the HBP where the maximum is $60,000 of contribution room and withdrawal. There's also no minimum holding period with the FHSA. You can contribute and withdraw the next day to buy a home and still get a tax deduction, unlike the HBP, which has an 89-day holding period. Another perk of the FHSA is that you don't need to pay it back, unlike the HBP, which you need to pay it back over 15 years. With the perks aside, there are things to note about the FHSAs. First is that the contribution room starts when you open the account, not from 2023 automatically when the FHSA was first released. The maximum that you could carry forward is $8,000 of unused room. So if you opened an account in 2023 and you didn't contribute in years 2023 and 2024, the maximum that you can carry forward to 2025 is $8,000, not $16,000 for 2023 and 2024. This means that your total contribution room for 2025 would be $16,000, which is the $8,000 carry forward from 2023 and 2024, and $8,000 for the 2025 year. In order to withdraw tax-free from your FHSA, you do need to keep in mind a couple of eligibility rules that you need to meet. The first is obviously you must be a first-time home buyer. The second is you must have a written agreement to buy or build a home with an expected completion before October 1st of the following year. The third is you must not have acquired the home more than 30 days before withdrawing. Another requirement is you must be a Canadian resident from withdrawal until purchase. And you must intend to live in the home as your principal residence. And lastly, you need to submit form RC 725, a request to make a qualifying withdrawal withdraw from your FHSA so that you can make that tax-free withdrawal. Tax-free savings account TFSA. If you maxed out your RRSP and FHSA, the TFSA is another great tool that you can use. The TFSA is a flexible tax-free investment account. However, contributions are not tax deductible, but your investments grow tax-free and you can withdraw funds at any time penalty-free. Though you can only contribute to your TFSA up to your contribution room. For example, if you were 18 or older in 2009, your total contribution room in 2025 is $102,000. If you turn 18 in 2025, then your room is $7,000. Now, the purpose of the TFSA is for long-term savings of a year or longer. If you make withdrawals, be aware that this reduces your contribution room until January 1st of the following year. So if you withdrew $5,000 in 2025 from an already maxed out TFSA account, you can't recontribute that $5,000 until January 1st of 2026. And if you recontribute to a maxed out account or if you over contribute, the penalty is 1% per month. So it can get pretty hefty. While a TFSA is not a first home specific account, it can be a great supplement after maxing out your RRSP and FHSA, and withdrawals are flexible and tax-free. Home buyer's amount tax credit. Once you bought your home, don't forget to claim the home buyer's amount. A $10,000 claim on your tax return that when you apply the 15% federal tax rate gives you a $1,500 tax reduction or refund. In the tax year you bought your first home, make sure to claim it on your tax return because it's an easy credit. And if you bought your first home together with a partner, then you could split the $10,000 claim, or you can agree for one person to claim it on their return. Property transfer tax, PTT. Beyond income taxes, there are other taxes like property transfer tax, or PTT for short. This term is specific to BC, but there are similar taxes related to transfer of property ownership in other provinces and territories. For example, in Ontario, it's called land transfer tax, and in Nova Scotia, it's called deed transfer tax. So make sure to do your own research for the types of transfer taxes unique to where you live. This tax often catches first-time home buyers by surprise. It's part of your closing costs whenever ownership of a property changes. To give you an example, let's go over the property transfer tax in BC in more detail. In BC, it's calculated as 1% on the first $200,000, 2% on the amount between $200,001 and $2 million, and 3% on the amount greater than $2 million. So if you're purchasing a $500,000 condo in BC, the PTT would be $8,000, and on a $1 million home, the PTT would be $18,000. The good news is that as a first-time home buyer, you may be eligible for a full or partial exemption. In BC, you can receive a full exemption if the fair market value is $500,000 or less, an $8,000 exemption between $500,000 and $835,000, partial exemption between $835,000 and $860,000, and no exemption for properties over $860,000. In addition, you can further qualify for property tax exemptions on newly built homes, with full exemptions available for homes valued up to $1.1 million. And this actually leads us into our next tax exemption on new builds, GST rebate for new builds. If you're buying a new build or pre-sale, don't forget about GST, the federal level for sales tax, which is 5%. The GST can be a huge cost for those purchasing a new build. For instance, on a $500,000 home, that's $25,000, and on a $1 million home, it's $50,000. Now, this is fresh off the press, but starting May 27th, 2025, the government of Canada is eliminating the GST for first-time home buyers on new builds under $1 million and reducing it for homes between $1 million and $1.5 million. Thus, up to $50,000 in savings for homes valued up to $1 million. This is definitely a game changer for first-time home buyers buying pre-sale or new builds. If you plan to buy your first home, make sure to plan ahead and maximize on all of the tax savings that we discussed today, which are just available to first-time home buyers. Let's visit the total tax savings of $62,700 mentioned at the beginning of this video. This is assuming that you are purchasing a $500,000 new home and you earn $80,000 in BC with a marginal tax rate of 28.2%. The potential tax savings are $16,900 $11,920 from RRSP deductions, $11,280 from FHSA deductions, $1,500 from the first home buyer's amount tax credit, $8,000 exemption from property transfer tax in BC, and $25,000 GST rebate on new builds, for total tax savings of $62,700. Plus, you benefit from the compounding tax-free growth inside your RRSP, FHSA, and TFSA. If you found this video helpful, make sure to give it a big thumbs up so that I can make more videos like this, and it'll also help reach more first-time home buyers in Canada get the information that they need to save money and achieve their home ownership goals. Thanks so much for watching, and I'll see you guys in my next video. Bye!